Hey, I hope you're having a wonderful day today. I am doing this week's weekly update on Tuesday. I hope you had a wonderful Memorial Day weekend. I wanted to wait to Tuesday to be respectful of the soldiers who have given their lives in the service of this great country. Thank you very much for your service. So, over the weekend, I had a friend reach out to me who is thinking about selling their property in Lawrenceville, and wanted me to kind of talk to him about it. So, we did a Zoom session and I kind of went through a few of the data points about Lawrenceville. And I figured I'd share that with you today. Now, one thing that I noticed when I was looking at Lawrenceville is that the inventory in Lawrenceville is very low. Typically, when we get into April, we're seeing inventory uptick for the peak season, and we didn't see it drop, but we saw it level out, flatten. So we're way lower in inventory than where we should be. And that's great if you're trying to sell your house. If you're trying to sell your house and you have less competition on the marketplace, then that means it's going to be easier to sell your house. And here we go. Last year, when you're looking at this, from here to like here was last year, all of 2019. And this shows you cycle of real estate. So we have active listings going up, and around April, it starts to go way up because we're getting into peak season. And it capped out for Lawrenceville at 719 properties for detached housing. But you can see as we got towards the fall, going into December, it starts to drop off as regular. And then we get down to its lowest point, which was in February. And then February, we start to see it go back up. We're getting back into the spring marketplace. People are getting their house on the market. And then we get to April. We're still short of April of last year. April of last year, we were at 637 active houses. Now we're at 594. That makes a difference. And what you can see here is with total days on the market, total days of the market is falling through the floor. So if you list your property, you're going to sell it quickly. So we're talking about buyers coming out of the woodwork. Well, there's less listings on the market, which is great for sellers. But again, I'm going to come back over here to the 10-year Treasury note. Okay, so this goes back to 08. And this is the 10-year Treasury note. The yield on this determines what interest rates are going to be. And you've been hearing those advertisements on WSB where it's like, you need to refinance right now because it's the best time in the history of ever to refinance and you're never going to get a lower interest rate. And you've been hearing that for the last 10 years. And they've been telling the truth. I mean, generally speaking, it's been on a downward slope. And we got to 1.8 at the beginning of the year, or at the end of 2019. And then what happened was you go to the Dow Jones and you look at the 1 year. So this is the effects of the coronavirus were like in this time period right here. And you can see where the stock market dropped and plummeted. And it hit its lowest point. Well, the money doesn't just disappear. The people pulling their money out of the stock market are going to put it someplace, and a very safe vehicle to do that is the 10-year Treasury note. So that's what they do. So if you look at the last 3 months for the 10-year Treasury note, the yield, when they put money into the 10-year Treasury note, the more money in it, the less the yield that it pays on it is. And the yield is there's a direct correlation between the yield of the 10-year Treasury note and mortgage interest rates. It's a phenomenal time to borrow money to buy a house. If we go to the 1 year for the Dow Jones, we're seeing that it's starting to go back up. So as this continues to recover, people are going to start pulling their money back out of the 10-year and the yield's going to go up, which means interest rates are inevitably going to go up. This is Lawrenceville, all price ranges, the average sales price for Lawrenceville. The average sales price for Lawrenceville, let's go back max. So this goes back to 2008. I mean, you can see 2008, the what happened from it. Everybody's losing value on their property, and then 2012 is when we start to hit the recovery period. But we've been in a nonstop climb. We see on average a 6.6% equity growth each year on real estate that you own or real estate that you don't own. So that means if you wait a year, what you want to buy is going to be 6% higher than it was now. And the mortgage rate is not going to be as good as it is now.